Okay, morning everyone. It's Monday. Sorry, it's Tuesday morning in Europe. So let's take a look at the DXY. I'm going to cover commodities. For now, for the DXY, this descending resistance seems to still be working, so that's good to see. What doesn't go up should come down. I mean, it's very early days, but so far Tuesday we have a bit of a drop. Let's see, there's probably news every day of the week as usual. But for now, as long as this descending works, you have to start looking at the next level of support, 102.6. If we keep going below that, if there's some very strong news or geopolitical, the usual stuff, 102, I see a support just below, thereabouts. So 102.6, 102. And if we keep going, I have added this little ascending because it should come into play. And if we keep going down, they should even coincide. So this level, this 100.8, which used to be very important. Remember here, the horizontal definitely is a level, don't get me wrong, but the ascending is also level and they seem to coincide, which is very nice. So this should be strong support. You expect a nice bounce, but for that same reason, it's significant if we lose it. And I think once you're at the lower end of this pennant here, you're pretty much destined to lose. 100 and actually go down to the 99 levels. And at that point, the whole thing will look really weak. So watch out for this, a retest of this area. DXY looks very weak if we're down here. But again, we're far from that. Who knows? Today could end up being a very strong day. And as long as if you close above this descending, now we're talking about 104 point, 0.3 and then maybe even higher. So, but we're not yet at crunch time, but something is going to give soon. So just watch, this descending and later, if we get there, this ascending. Very, very important sloping trend lines here. Okay, yields also have their descending. This is the 1 year. I don't pay too much attention, but there is a bit of a breakout of the descending. So let's see, normally you'd back test and go back up. I do feel like yields have seen their lows. I mean, even if we come all the way back down, I just feel like it's, a bit overdone. And now the mood is yields, inflation is back, I feel, or that we haven't seen the low in inflation. Some people think we've landed the soft landing. It's absolutely ridiculous. And I just feel like we're going to see a return in inflation this year easily. And for that reason, yields will probably go back up. And I don't think yields have priced in the return of inflation actually. But look, back we go on the 2 year, hit a bit of resistance, right? This is the highest last time. So we had a nice bounce. I do again feel like we're going to go sideways here and back up. This is a very strong bounce. I don't think you go all the way back down. And I don't even think you go back down too much. But if we do go back down, I think we're going to bounce back up here. I just feel like yields sideways up, actually. But for now, we're at mini resistance, let's say 5 year. Also, we hit mini resistance here, this horizontal. We tagged it last time, tagged it this time. Again, we can go back down a little bit, but I think we're going to retest. I really do. The chart wants to retest. Maybe news can say otherwise. If you have some, I mean, with all the data release, obviously news can do its own thing, but 10 year, a bit stronger than the 5 year. We know this trend. So here we've tested also the horizontal and now we pushed above it. So again, you'd expect a small retracement here. We're actually at support. Maybe we can go higher again, or do we go a bit lower and then bounce? 30 year, even stronger. That took out the horizontal some time ago and then went to the next level. So what do we do? Do we go back and test this and then bounce, or do we go back and retest? I think the point is yields. I don't know if they can outperform the DXY, but can you see a scenario where yields go up and the dollar doesn't? I mean, in a fear trade, not sure. It's possible, but if you buy bonds, yields go down. Maybe I'm not sure, but I just feel like you could have some outperformance where yields go up, but the dollar doesn't. I think that is possible. So, well, yeah, I mean, look, if you need to consider inflation, if the market needs to consider inflation a bit more, you could say the dollar goes down because inflation is real, it's here to stay, and the dollar cannot really benefit from inflation, and yields are going to go up to compensate for inflation. So maybe we're going to start seeing yields rise, but the dollar not rise with it. And as a more long term, yeah, I think as long term, you could start to see yields go sideways up and the dollar sideways down. It's just something I haven't considered, but I think it's time to maybe consider. Anyway, straight to commodities. So copper has gone down to its sort of 3.75-ish level. We've held that quite well, and now we're sort of breaking out, not with much power, but we're holding this line, and we should bounce. We should bounce, but the markets have bounced a lot. So if the market comes down, can copper really go up? And also the DXY and yields, if they go up, that shouldn't really help copper. So again, you need to consider the dollar, not really yields. Yields just affects the dollar, but let's just say the dollar and market. So if the markets go down, copper should go down. If the dollar goes up, copper should go down. So I think naturally copper wants to go up, but you need to consider the other elements. Natural gas is absolutely ridiculous. I mean, I got out of my N gas London Stock Exchange ETF. It was just eroding me. It wasn't even following the price. It was just decaying. It's something I hate about ETFs. So I got out at a small loss, but it was a loss. I forgot where. This is not even the correct. This is just natural gas. But yeah, it wasn't working out, and natural gas now isn't working out. So I'm happy I'm out because the ETF, not only would it be at lows, but plus erosion, probably new lows right now. But natural gas, I mean, still, if you have a way of buying it and holding it without some erosion, I still think it's a good entry, these levels. I mean, zoom out, remember where you are. This is absolute lows. I mean, it can go lower, of course, and go all the way to 1.5, but it's crazy stuff. I think if you entered here and you could hold it for several months or even years, if you had an instrument to use, I mean, you should end up being able to sell it here in the gap fill or even testing 5. I mean, it has to go back up. But this is crazy stuff going all the way up here and then just completely over the top retracement. You're not supposed to be able to do that. And then the bounce is pretty vicious. I mean, you could have gotten out here pretty good too. And then all the way back down and to a new level. This is just not normal stuff. So natural gas works on its own supply demand. It doesn't follow market data, the S&P or the dollar or yields. I don't even know the news here. Was this something to do with the Red Sea, the Houthis attacking? Well, no, if they attack natural gas tankers, which I thought they did, you'd expect the price to go up. But anyway, this is just crazy stuff. We are pretty much at a low, right? At least we got that. Even though technicals don't really work for natural gas, you can be pretty confident you're at a low here. If you go lower, I would just say 1.5. I doubt it goes to 1.5. That's a huge drop. So anyway, let's just see. It should stabilize here and go back up. But no, natural gas, nothing is obvious. But this is crazy stuff though. Okay, oil. Yes, this is what I did think. So, and this we can delete now. We were coiled. I said we're coiled, likely to go up, likely to close above this descending and move up to 80. Okay, the day is young, but I think that's what's going to happen, right? We're just going to hit our head maybe on 76, maybe even close above 76. But once you do, we're going straight to 80. So oil should go up. This one has been a lot easier to call than natural gas, that's for sure. So let's watch oil. It should go up to 80. If for some reason it could go down actually, but it should find support on this ascending. I still think we're on a uptrend. So I'll probably close above this majorly important descending, by the way. This is pretty important, this descending, much more important than this horizontal. This horizontal would just be extra confirmation that we're going to 80. And like I said, we should go to 80, some back and forth, whatever, and then up here, testing this extremely important descending. So I think we will be going, okay, I don't know, something like this, and then we can go sideways, and then it'll be this one here. Oil looks good. Okay, uranium. Uranium has closed its gap. It's closed its gap. It kind of underperformed everything yesterday, uranium. I don't know if it was anything specific to uranium, but maybe just wanted to close its gap. Gap closes seem to be really statistically quite probable these days, but there you go. There's your gap fill. It did close at low of day. So should there be a little extra continuation? I don't know, but it's got very strong support. I'm going to get rid of this one actually, because I feel like what happened here got rid of nullifies this line. But this one here should be extremely strong. Look how many times we've tested it over a decent period. So, 1, 2, 3. Is this one 4? Not really. 5. So you should have it could even bounce now. Otherwise, if it keeps going lower, very strong support around, just under 28 for sure. But I expect, 29.5 already to be a level. So let's watch uranium. Otherwise, back up we go, right? I mean, the trend is your friend. Very strong uptrend in this one. Platinum. Yes, this was again, it reminds me of natural gas, actually, platinum a bit. Not really, just the fact that it goes down so much. This is over the top retracement, actually retraces the whole move back below this pivot here. But now we're bouncing, and again, I think we should go up to this 950 zone at least, you know. So even if it wants to come back down, which I don't think it will, at least touch 950 before. Palladium, a bit like platinum, just huge move up. I like this. I called this, but I did not see a move all the way back down. I mean, to retest the descending breakout, yes, that's possible, but to keep going below, very rare. But I do expect a bounce. It's like it just catches some technical traders off guard, making a new low, but then bouncing from there. We could bounce again. We could bounce to, like, I don't know, something like this at least, maybe even all the way back up here. But I do expect a bounce now. Okay, gold, silver. So today we're up a little bit, but today is very young. Yesterday it was a small retracement. You can see 2015, look, I've had this line for pretty much ever since here. It is a bit of a level. I know we touched 2000 and that was more of a psychological day, and it held, which is good, but it looks like 2015 really is a level. Let's just go 15-minute chart. Look at this. Yesterday we tested again, by the way, I think 2 or 3 times. So it's just interesting. 2015 remains a level. Well, if everything continues as it is, we can go back up and start testing this 2060 level. I'm going to get rid of this ascending now because I think it's interfered too much. I think the horizontals are good enough. I don't need to add one at 2000. Everyone knows the number 2000. If we close above 2000, then, down we go to 1975-ish, give or take $5. And after that, I'd say this 1940-ish zone. But I think it's time to look at some upside targets too. This descending is now useless. Thank you for your help. If we go back up, I'd say 20, normally you'd say 2050. I'd say 2060 is a mini level. After that, it's 2080, 2150, and it's toast. It's going all the way up. But I see, these little highs from here. I don't know, 2055 or something, but it's time to look at this. Look at the open of this day here, 2055. The high of the day before that, almost 2060. Before that, 2060, the high. I think 2055, 2060 is a level to consider. So if we keep going up, maybe we hit that. Yesterday, though, it was a red day, but we held 2015. So it's like a small bullish day, just proving that support held. And obviously today we have the dollar just dropping a little bit very early, but still gold up, 0.5% is something to consider. Now, let's not pretend that this didn't happen. Silver, and this is bullish, I think, for the miners, right? Because remember, you had days where gold and silver were holding up and the miners were flushing, right? All of last week, pretty much, like the miners were down several percentage moves despite the metals kind of holding. You're like, wait a minute, gold's at 2030, 2020, we did go lower, but we're pretty much at 2020, 2030. The miners have just been decapitated. That's not good. Because if you're investing in the miners, the best case scenario is something like yesterday. Silver was down, what was it, down 2.5% or something, and the miners were down 0.5%, 1%. That's serious not serious, but that's obvious outperformance. And that's what we haven't seen in a while. That's what you want to see. That's bullish. That's also the best case scenario. Miners go up, metals go down. I love that. If that happened every day, that'd be beautiful. Even if you hold miners and metals, that's still great because you're probably making more in your miners. If the gold and silver just going down, 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 and your miners are going down a little bit or even going up or unchanged, that's amazing. Because imagine when they bounce. So silver flushed, it hit, you could see this little low here. Maybe I should move this up a tiny bit. Maybe this really is the level. But 22, not really a level. Sorry, 22 is a level, kind of roughly. But this level here didn't really hold. I don't know. Maybe this should be now considered irrelevant. I wasn't too sure whether it was or wasn't. I'm gonna delete it because I like to delete lines, but I can see why I had it before. You know, it was low here, 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 and also on a close on a daily basis this level. But anyway, it seemed to not care, and down we went. The point is, silver got flushed on, and the miners outperformed, so it's good. Now we're going up with gold, so maybe this becomes resistance 22.5. Let's see. It'd be really nice if it just rises. If gold, by the way, starts to hit 2060, I think we're gonna have silver, start to close above this level, hopefully above these three candles here. So above 22.8, 23 would be perfect. Close above 23, and we've had this big engulfing reversal, and then we can start targeting up here. Because let's be honest, if gold's gonna start hitting 2060, silver, oh, and I found my nice little sloping, silver is gonna have to move up a lot to catch up. So this, I think it looks bad, but I think it was actually a little bullish. So let's have some continuation in gold and silver. But again, we have to consider what happens in in the dollar and yields. That's a bit tricky because I do see yields not going down too much, but the dollar can. So let's watch. But for the miners, it was a good day. I mean, not a brilliant day. It was still red, but just given what happened to gold and silver. So let's look at GDXJ. First of all, no, I'll get to silver later. GDXJ held. This level is holding. It's a clear level of support, 33 point, let's say, 4-ish, right? So we closed above. We still need to close above this level here, 34. I think we were going to do it, but then there was this big flush. So the mines are definitely outperforming. And there you go. That's all I'm going to say. Support is here. Next level is there. I've covered this before. I don't think it's incorrect. Absolute lows down here. I don't see this happening unless there's a huge move up in the dollar. Let's close above 34 on the GDXJ, and we should start to gap fill here. And there you go. The rest of the levels still count. And it was very nice to see them outperform the metals. And now the metals are going up, by the way. The miners should have a good day if everything holds until market open. Again, here, look at this. Nice candle. It was a red day, but look at this nice candle, despite silver being down 2.5%. So again, this level here, 27 point, I don't know, 35-ish is a level. Let's close above 28. We should immediately gap fill, and then let's see if we can keep going up. But the miners, a bit like silver, have so much catching up to do. Imagine today, seriously, imagine today you have gold all the way at 2060, which is not a big move. That's just an extra what? Okay, you probably won't do that today, but 1.5% move in gold, that's not too much. You can do that in 1 or 2 days. Well, that should mean the miners going up just a huge amount, So the miners have so much upside if gold can just do a little bit. Now, finally, SILJ. This here, not exactly the ETF I've covered the most, but very significant, I think. Look at this. This is almost, it's not, but almost a bullish engulfing candle. Silver was down 2.5%. And you got SILJ doing this. That's actually a green day. It was up 0.5%, despite silver being down 2.5%. That's huge outperformance. So there's something special there. That's a bit rare, but it's very bullish, and it's also something I said we've been waiting for, an outperformance of the miners. So is it the start of some trend that can last several days? Hopefully. All right, it's a long video. It's not meant to be. I hope that was nice and detailed and transparent, etc. Enjoy today. Let's see what happens, and hopefully this outperformance can continue. Good luck.